What's good, people, traders, and dedicated gold chasers? Welcome back to the Modern Day Trader channel with your boy Marcy. And today we're going to be doing something slightly different. We're going to be backtesting something that I personally haven't done yet on a uh, live stream. I haven't backtested. This is going to be slightly different. It's more of an exercise compared to a backtest per se. So yeah. I'll explain to you guys what I'm going to do as I set up the Excel sheet for how I'm gonna be capturing my data. So it's pretty simple, really, if you think about it. So in trading in general, what you want to do is you want to trade based on a certain amount of data, right? And when your strategy performs in a certain way or does certain things, maybe something out of the ordinary, or does something and is playing out to what you know, if you're an ICT trader or if you're smart money trader, if it bounces out of a particular point of interest, or if it bounces off from a OTE, or whatever the case may be, you just want to know what the chances are of this thing happening on a particular day, what the chances of whatever the case may be. You want to know what your chances are and what your statistics is, that if this happens, that happens. So with that being said, I have a 3-part trading plan. I have a directional bias, I have a confirmation, or I have evidence, and then I have a confirmation, basically. So what we're going to be testing on today's live is we're going to be testing directional bias. And I have 3 types of directional bias: when the daily and the 4H agree, as you guys have seen in multiple videos before. So when the daily and the 4H agree, that's one. The second one is when we have 4H correlation, meaning you have the same 4H close across multiple pairs, and you want it to be in the same direction for 5 of them out of 6. And then the third directional bias that we have on any particular day is when we have number 1 and number 2 combined. So when you have the daily and the 4H on pounding close in your direction, and then you also, along with that, have 4H correlation. So you not only do you have the daily and the 4H, but you also have like 5 out of the 6 pairs closing in that particular direction, whether it be bullish or bearish. And with that being said, those are the 3 directional bias that that I trade. And the simple exercise that I'm doing today is, what are the chances of the next 4H candle trading in my direction? And the reason why I'm only saying the next 4H candle is because when you trade a particular session, or you're an intraday trader, all you need to really do is determine what the chances are of the next 4H candle moving in your direction. When you can determine what the chances of that next 4H candle is, if, for instance, let's say the daily and the 4H correlation has an 80% chance of price action, or the 4H moving in our direction every time we get a daily and a 4H plus correlation, then what that then means is that, when that occurs, that there's a high chance now, because you've seen it all along, that the next candle is going to move in that direction. And if there's a high chance, all you need to determine now is, number 1, the direction in which, or the probable direction in which the candle is going to move. So all you need to determine is how to enter. And it really takes away the thinking when you do know your statistics. And so without further ado, so this is basically the spreadsheet that I'm going to be using, the Excel sheet that I created. And I changed this at the bottom recently. I've captured January and February of 2023 already. And all you're really going to be doing is you're going to be going through these on the chart and then capturing them as they happened. And then you put the fact that, so here we took a bullish, so we had a bullish bias for this particular session, Thursday, between 8 and 12. And then what you can see is that the next candle didn't play out. We were looking for buys. Next candle didn't play out. The next candle only pushed up 13 pips in our direction, and that's that. Now, what you can see here is that on this particular day, we had a daily and a 4H, daily and 4H correlation, or daily and 4H plus 4H correlation. The next candle was bullish. We were looking for buys, and the next candle pushed up in our direction 75 pips. So we took one trade here, and the reason why I'm not marking this off is because this next trade or the next candle only moved up 10 pips in our direction, which was bearish. And because it's 10 pips, it means that more likely than not, I probably wouldn't have taken a trade. Because I'm a breakout trader, I probably need price action to move a bit further. So when the next candle only moves 10 pips in our direction, I record a potential trade as no trade, just because I know that that's going to be too little for me to actually end the trade. I probably didn't even break out of 15-minute structure, so I don't record that as a trade. So this one would be one bearish potential trade, and then one of it actually playing out in our direction. So what you can see for February, yes, there was nothing there. So this is 0 and 0. And then there's one more left. Let me copy this up here. And then there's the last week of February left. And what you can see is that we've taken no trades for daily and 4H. We've taken one trade on the 4H correlation. The next candle didn't play out, so you can see that that did not play out. It only went up 15 pips in our direction. We were looking for sells. The next candle played out for buys, and it is what it is. You're going to lose some, you'll win some. And then on that same day, the 12 o'clock candle, we had a bullish bias. The next candle played out bullish bias, 25 pips, potential buys. And then similarly on the Tuesday, you can see that we have daily and 4H correlation. There we go. The next candle played out, and then it played out for 75 pips. So this needs to be 2 trades taken, 2 trades played out. And this is 3 trades and 2 trades playing out. So we have a 67% win rate. Now I put this formula here just to say that this total trades in our next candle need to equal our total potential trades. And if it's true, then it equals to it. If it's false, then it doesn't. So you guys can see that that's 3 and that's 3. So now this is wrong. I still need to properly fix this this section. I feel like this is more likely than not right. You can see that most weeks where we actually took trades on the daily and the 4H. Okay, yeah, there's one that's wrong. But we have most of the time, or majority of the time, we have 100% win rate on daily and 4H plus 4H correlation. And that's something that I've taken note of, and something that I really want to explore moving forward. So yeah, now what we're going to be doing is I'm going to move this Excel sheet. Since you guys seen the Excel sheet, I'm going to move this over onto the other screen, and we're going to be looking at the charts as we go through March. So yeah, pretty much we're going to be going through March. And then I just need to, let me just do this, take this line off here, and then go to February and copy these things. I should probably copy the whole thing and paste it right there. There we go. Make this 0, 0, 0, 0, 0, 0. And now you can see that this is false because this does not align with that, which is perfect in my opinion. So let's copy this and then paste it right here, because this is the new formula that we'll be using. Oh shit. before we do that, we need to make some spaces. All for being prepared, man. And once we have the Excel sheet set up, then we can just go ahead and start capturing the data and backtesting the data. So yeah, pretty exciting, isn't it? Okay. Time to get to the actual shits, bro. Time to get to it. Let's see. So I'm gonna move this Excel sheet over, and then what we're basically gonna be looking at is the directional bias, as I mentioned. The next candle, we're going to be looking at the pips from the candle flip. If there's news on a particular day, we won't be trading, so it's automatically going to become a no trade. When we have a directional bias and the next candle moves up in our direction more than 10 pips, we will have a potential trade in the direction of the directional bias. And then we'll just record the next candle to see if it was a potential winner or loser. So now January and February is done. The goal for today is to potentially get through at least half of March. So we need to get through at least half of March with regards to recording our information and data collecting. So yeah, without further ado, let's jump straight into it. So first, when you're looking at TradingView, your first step in this whole process is number one, to first open up Forex Factory, because this is my steps when I actually get to the market. My first step is to always open up Forex Factory, and we're on the 1st of March 2023. So you want to go to 2023 March number one, and then we can go all the way till there. We check if there's any red folded news with GBP and USD. If there's any red folded news with GBP and USD in your particular candle that you're going to trade, you're going to put it on the Excel sheet, and then you're going to note that you're not trading in that day. And the only reason why we do that is mainly because we lose when we take trades within news times. I don't know why, but that's just what the numbers say. So what you guys can see here is at 12 o'clock, we have a red folded news. So I'll put that at the 12 o'clock candle. Stay. Let me show you guys. So at the 12 o'clock candle, I'll change this date now. And I'll change the date to, let me actually check what day this is. So we started on a Wednesday. So I can take Monday and Tuesday off. So we've taken Monday and Tuesday off, Wednesday, the 1st of March. Let's change this. So 301, 03, 02. Oh, shout out, baby. I see you. I see you, Mishka. Shout out. You know your boy's been working on the Excel skills and shit. Yeah. So we updated the Excel to reflect the 1st, 2nd, and 3rd of March. So now we know that we have pound news on Wednesday, sorry, at 12 o'clock. You can also see that we have USD news at 5 p.m. Now that is outside our trading session, right? So we have pound news here at 12 o'clock. You're going to say yes. So now I know that when this yes is here, this is from prior when I copied pasted. So this right here, this yes that's here, you know that when that is there, you're not even going to look at this this bias for the day, because when you step to the markets in my plan and I see this news, we're not trading at all. We're not even going to look at the chart. You don't want to look at directional bias. You don't want, because that's going to make you want to trade if there is anything in your direction. But if there's nothing in your direction, that just is what it is, bro. Like when there's news, you just step away, and yeah. So we're going to go to the chart. We're going to look for, click on here, go to 2023, March the 1st, and you go to it. So now we're looking at the 1st of March on the daily time frame, which is right here. So what do we need to do? We need to look at the previous daily candle. Previous daily candle is bearish. So we know that the 1st of March or the 28th of Feb was bearish. So when we're going down onto the 4H time frame and we're looking at the 4 o'clock close, which is the previous 4H close to our session, you want to see a close in your direction. Now what you can see here is that effectively we have a bullish close, and that basically means we don't have daily and 4H. So we know that that directional bias is out now, and we know that the daily and the 4H directional bias is out, right? So the only other thing that we can check for at this point is 4H correlation, and that what that basically means is, as I mentioned at the start of the video, the same. So we're looking for bullish 4H closes at 4 o'clock across all pairs, which is GJ, GU, EJ, CJ, UJ, and AJ, right? So let's go through them all. So on pound USD, what do we see? We see a bullish close, perfect. On Euro JPY, we see a bullish close. So we have 3 out of 6 so far. Then 4 out of 6 with CAD. We only need 1 more. What does USD have? USD have a bullish candle. So now what you mark is you come to 4H correlation right here and you say a bullish close. So now you know there's potential that we could have a potential buy trade. The only way we won't have a potential buy trade is if the next candle only moves up less than 10 pips. Let's go on. Let's check AUD JPY. What does AUD JPY have? AUD JPY is bullish too. So we have bullish 4H candles across all pairs. And when you go back to GJ, what you can see is that the next candle actually closed bearish. So you're going to put that in the next candle, bearish. This is a potential buy trade. And now you want to check how much pips the next candle actually moved in your direction. So we're going to take the measuring tool. We're going to pull it from the open all the way to the top. And you can see that's 25 pips. You're going to put that 25 pips in this block right there. And you can see that this would have potentially been a losing trade, which is perfectly fine. Now, because there's news in this session, we're not trading that session. It is what it is. It's fine. It's perfectly fine. It's actually debatable that this news was in that candle, just because it's from 8 to 12, and then the next candle starts at 12 to 4. But anyway, I think I don't know. It just falls on the open of this candle, so I don't know. I honestly don't know. Let's go on to Thursday. So you're gonna go into Forex Factory first. You're gonna determine what Thursday have in store for you. So you can see that Thursday has no pound or USD news for the red folder. So it has no high impact news basically. So we know that we can potentially look for trades on that particular day. So we're gonna go to the daily. We're gonna go to the second. And now what you can see is that the second, well, when you get to the charts, you wouldn't see this candle. This candle would still be open. All you'd be able to see is this candle right here. And the previous day, which was the first, closed bullish. So when you go down to the 4H time frame, you're going to be looking for potential bullish candles. What you can see is that we have a bullish close at 4 o'clock. So we know that we have the daily and the 4H aligning now. So we have a bullish close. As you can see, I marked that as bullish. And then we're going to go across all pairs and see what happens. Let's see. So bearish, bullish, 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 and we need one more bullish close. Bullish. Okay, perfect. So what that means now is that we have 4H correlation and we have the daily. So in theory, we can mark this one right here. So when we mark this one right here, we can take these two off, just because that means we have both of them at the same time. Now we're looking at the next candle on pound JPY. The next candle closed bearish. Dun, dun, dun. That's so sad. But you can see that that was 14 pips. I don't know if we would have gotten a trade, but it is above 10 pips. And just to keep it completely honest and true. Now, what I forgot to mention is that we do round down by 5, right? So we're only going to be keeping the pip counter at 5s, and you're always rounding down, you're never rounding up. So if you're at 18, you're rounding down to 15. If you're at 19, you're still rounding down to 15. When you go above 20, that's when you round down to 20. And the reason why I'm doing this is to properly account for like wicks, right? So in theory, I wouldn't have traded this thing, because if this moved up 14 pips and I'm rounding down back to 10, then that means it's actually a no trading session. So what I'd do in that case is I'd mark this as bullish, and then the next candle obviously closed bearish. And now, because we have 10 pips, it's a no trade session. Like there's no way I would have potentially gotten in at that with like 10 pips moving in my direction. Hey guys, man, I'm not gonna lie. Just checking the whole time. It's mad. It's actually mad. But yeah, so we have the bullish. So the daily was bullish. The 4H was bullish. 4H correlation. Next candle closed bearish. Unfortunately, pushed up by 10 pips. No trade, because we wouldn't have gotten the breakout, right? So we're gonna look at the next session. Let's look at the next session. So we change the time to 8 o'clock. So we have a bearish candle. We know that the previous daily candle was bullish. So we know that we don't have daily and 4H time frame aligning. So the only way we'd be able to potentially trade is if we have 4H correlation. So let's go across all pairs. Okay, so we have 2 bearish candles, 3 bearish candles, 4 bearish candles. We need 1 more. 5 bearish candles. And what did AJ do? 6 bearish candles. Perfect. Okay. So now we know we have potential 4H correlation. The next candle. So this is going to be the last time I'm going to pull this across here, guys. I just wanted to show you guys what I'm actually doing. But now I'm going to go ahead and do the work and really move forward in actually capturing, because I do want to get through quite a bit before 8:30, 9 o'clock. So yeah, that's what you basically do. You look at the chart and then you determine what the direction was based off from what's actually occurring. And then from there, you look at the next candle, you mark the next candle, you look at what the pips is, and then whether there's a tradable day or not, based on directional bias and then the amount of pips. And then another factor would be news, of course. But let's start working. Okay. So we have that. We're going to check this. 11 pips. So it's not really a tradable day. Unfortunately, we would have had bias in 2 sessions, but we wouldn't have no trades. That's quite unfortunate. Yeah, let's go to the next day, Friday the 3rd. Why is this the 6th of March? Friday the 3rd of March. Okay. So what you can see is that this candle was actually bearish. So when we going down, we're looking for bearish closes on the 4H time frame. Bullish close. Unfortunately, we don't have daily and 4H correlation. Daily and 4H correlation. Look at it. Bullish. We're just looking for bullish 4H closes right now. Bullish. What is this? So we have an open of 575. We have a close of 585. So that's a bullish candle. We need 1 more bullish candle, I think. Bullish. And then what did AJ do? AJ was probably bullish too. So we have 4H correlation. Let's mark that 4H correlation. And now you want to see what the next candle actually did. Next candle closed bearish. And I can already see that there's hardly anything that moved to the upside. That's really 0 pips, 4.6, 0 pips in our direction. Bearish shows no trade. The good thing is, in this week, we would have had so much directional bias, but unfortunately we wouldn't have traded. We would have taken like one trade from Wednesday through Friday so far. And the good thing is, like, what this is telling me is that you don't have to force any trades, just because like the minute you start forcing a trade when there is correlation doesn't necessarily mean you're going to win. So you just need to have patience for the actual trades to come. So yeah, this exercise is quite helpful in and of itself. What you can see here is that we have a 4H bearish close, which is perfect because that means we have the daily and the 4H aligning both being bearish. So let's go through the 4H correlation real quick. We need to mark this at 8 o'clock. Bullish, okay. We need all of the pound pairs to be bearish, essentially. That's 3 bearish, 4 bearish. We need AJ to be bearish too. 5 bearish, perfect. So we have daily and 4H correlation both being bearish. And then what does the next candle do? The next candle actually closes bullish, sorry. And how far does it move in our direction? A whopping 4.4 pips. Bollocks, mate. What the hell? But I guess the good thing is we wouldn't have traded. So this is how we would have ended the first week of the month. No trades taken for daily and 4H. We would have had multiple station buyers here, but we would have only taken one trade here. So we have one trade and we really lost that trade. Or we could have potentially won it. Who knows? At a 1-to-1, there was a potential that we could have won it. Who knows? Yeah, we would have had multiple session buyers, no trades taken. Yeah, we're going to say 1. This needs to be 1. And there we go. It turns to true. Perfect. So basically, what I've noticed now over the past 3 months from January, so this was actually a decent month with a 67% win rate. February, or decent week, sorry, week 1. February's week 1 was also pretty shit with a 33% win rate. March, 0% win rate for the first week. So what I've noticed, obviously it's a small sample size of 1 month, of 3 months, sorry, 1 quarter. But what I have noticed is that like the first week in the month is pretty shit. Good thing is we're collecting data, guys. So yeah, the more data we collect, the easier it's going to make it for us to make decisions in the live market conditions. So I mean, if week 1 doesn't perform, then we can just not trade in the first week of the month. Yeah, I'm pretty keen on looking at like the rest of March and seeing if I can finish these things. So if I can finish March, that will be perfect. Let me pull this over. We're going to look at the news for the next week. So that was Friday the 3rd. What do we have on Monday the 6th? Now I know that the actual first week of the month is jam-packed with news. So we need to change the dates to, let's change this. 06. Tuesday is the 7th. Wednesday is the 8th. And then Friday the 10th of March. Perfect. Let's check the news. So on Monday, there's no news. On Tuesday, there is news, but that's at 5. That's outside our trading sessions. On Wednesday, we have USD news at 3. So that's in the 12 to 4 o'clock candle. So we'll mark that. And then on Thursday, we have unemployment claims, but I'm not going to mark that just because it is a orange folder, is not red. And then on Friday, we have pound news. So we're going to mark Friday, London session. We're not trading that. And then we won't be trading New York session on Friday either. So this Friday in this particular month and week, we won't be trading the whole of Friday. Let's go through the things, bro. So we go to Monday the 6th. This is Monday the 6th. Friday was bullish. Monday is bearish. Okay, Friday bullish. So we're looking for bullish candles on the 4H time frame to see if we can get the daily and the 4H aligning. What do we have? Do we have a potential bullish close? The open was 4.8. The close was 4.27. We have a bullish close. Good thing is we have a trading session right here. Let's check what 4H correlation has to say. So we go to GU. That's a doji candle. It's still bullish though. Bullish. That's 3 bullish candles. That's 4 bullish candles. And what is this? That's 5 bullish candles. So we have the daily and 4H plus 4H correlation. So that's perfect. So let me mark that off. And then we can check the next candle. So let's check the next candle on the 4H time frame. The next candle closed bullish, which is perfect. So the next candle closed bullish, we added 31 pips. So we're going to mark that as 30 pips. Mark this as bullish. And we would be looking for buys. And boom. And yet again, what you can see is that this thing, it really performs, bro. I don't know. This thing really performs. Yes, like you'll get less trades when you only trade that particular directional bias, but when the daily and the 4H and 4H correlation aligns, there's a higher chance that you're gonna win a trade. It's just fucking mad, mate. But yeah, okay, let's continue. Let's go on to the next session. So yeah, we can already see that on the next session at 8 o'clock we have. Wait, the daily was bullish, right? Or was the daily bearish? Daily was bullish. Yes, we traded Monday. The daily was bullish. Okay, that's perfect. Then we go into the 8 o'clock close here. I remember the 8 o'clock close being bullish. So we have daily and 4H. So there is potential that we could look for buys, even if we don't have 4H correlation. I can already see that the next candle closed bearish. So I can put that in there. And I can also see that regardless of what my directional bias is, whether it's just the daily and the 4H correlation or both of them added together, we won't have a trade here just because this candle moved up 4 pips, which in essence is basically no pips because we're rounding down. So the session wouldn't have been a trading session at all. Quite sad, but it is what it is. But anyway, we still need to complete this to just note what it could have potentially been. So let's go on and complete this. Bearish. We're looking for bullish candles, remember? That's the second bullish candle, third bullish candle, fourth bullish candle, and bearish candle. Okay, so we only have daily and the 4H. That's all we have, guys. And so Monday is done. You can see that Monday is done. I swear this exercise takes quite some time. But maybe if I stop speaking, it will go faster. I don't know. But I think as I speak, I understand it more too. But you can see that we've taken one trade on the Monday, or we would have potentially taken one trade, but it would have played out. Let's go on to the Tuesday. So we're going to Tuesday, the 7th of March on the daily time frame. So this is the Tuesday. You can see, oh no, this is AJ. We need to be on TJ. So this is the daily time frame. You can see that Monday was bearish. Let's see what the 4H done. Okay, so this is the 4 o'clock candle. So you can see that we have the daily and the 4H already. So we can mark that as bearish. And then let's change the time frame or the time to 4 o'clock because we want to know what the 4 o'clock close was. So here you can see it's bearish. The next candle closed bearish, so we can mark that off already. The next candle closed bearish. We don't know if this happened yet, but we can mark this off because we're already on the pair. And then what you can see is that the next candle actually did a decent amount of pips of 67.6 pips. So that's going to be marked as 65 pips on the spreadsheet. We're going to say to sell just because we would have been looking for sales based on the directional bias. Now let's check if we have 4H correlation. Perfect. That's perfect. Let's go. Fucking wonderful, mate. Let's go. More bearish candles, bro. Give me more bearish candles. Wonderful. Boom. Let's go. More bearish candles. That's wonderful. So what that basically means is that now we unmark this one because we have that one and that one, which means in turn we would be trading this one. And as I mentioned, bro, this thing, if you want to take anything from a trading plan, just take this directional bias. That's the only thing. Like determining directional bias for the next 4H candle, I swear, like you don't have to listen to me about anything in trading. But this right here, I swear this thing plays out. Like this thing plays out, I think at least, obviously we're doing the numbers now, but I think at least 75% of the time that when you use this directional bias determination, this right here that's highlighted, there's a 75% chance that the next 4H candle will play out in your direction. And we'll see. We'll see at the end of the next 2 weeks when I'm done with this data collecting, I'll give you guys an exact stat on the whole of 2023, how much this actually played out. But this to me right now is like a golden egg, bro. I'm not gonna lie. It's really like a golden egg. So yeah, let's continue. So we know that. Let's go back to TJ. What was the next candle? So we're going to the 8 o'clock candle. We know the previous day was bearish. So we're looking for this candle to close bearish too. Next candle was bearish. Perfect. So now we know we have the daily and the 4H aligning already. We can put that as bearish. Next candle was bearish. So we can mark the next candle being bearish too, which is really good. How much pips did that candle move from the open to the low? That was 21 pips. So let's mark that as 21. Let's put a potential trade as sell because that's what we would have been looking for. Now let's check 4H correlation to see if we have 4H correlation. Okay, perfect. That's a bearish candle. That's another bearish candle. It's another bearish candle. It seems like we're going to have another. It's another bearish candle. Oh, we have it, bro. That's another day. And another bearish candle. Wonderful. Wonder-fucking-ful, mate. So we're going to take this off. And we're going to highlight this one right here. Bearish. And as I mentioned, bro, this is 100% like not win rate, 100% bias determination rate. And I feel like this removes 70 to 80% of the guessing because I feel like most people lose on the basis that they don't have a foundation to determine directional bias. Remember that. Most people lose because they don't have a foundation to determine directional bias. And yeah, I'm giving you something pretty simple, pretty mechanical. Like there's no if, ands, or buts about it, bro. You need this to happen in order to say you're trading in that direction. Pretty simple. Pretty fucking simple. Anyway, let's continue. We know on this Wednesday we have news, so we won't be trading New York session on this Wednesday. We're not even going to determine directional bias on that Wednesday. So we're just going to be looking at the 8 o'clock candle or the 4 o'clock candle to see what the directional bias is for 8 o'clock. Let's continue. So we go back to the daily candle on GJ. And we're going to Wednesday. So this is the Wednesday candle. So we're looking at Tuesday. Tuesday was bearish. So we know that we're potentially looking for a 4H bearish close at 4 o'clock. Or the 4 o'clock open, 8 o'clock close. What's this? So you can see right here we have, okay, I can't move that. Right at the top here, you can see that the open was 162,793 and then the close was 162,767. Although it's a doji candle, it's still a bearish candle. So what do we have? We do have the daily and the 4H agreeing and they're both bearish. So let's go through the correlation. What we have, a bullish candle, so we basically need bearish candles across all yen pairs. So we have 2 bearish candles, 3 bearish candles, 4 bearish candles. We missed that by 1 candle. So all we have is daily and 4H. So now we need to see what the next candle did. What did the next candle do? The next candle actually pushed bearish, bro. Am I looking at the right thing? Oh, fuck, I'm looking at the wrong thing. Sorry, guys. My time was on 8 o'clock. It should be on 4 o'clock. Jeez. Okay, so we don't have directional daily and 4H again. Jeez, sorry. It's been a long day, guys. I got excited there for a minute. But we have this candle being bullish. So now we're going to look across all other candles to see if we have more bullish candles. Otherwise, we'll be a no trading session. Bearish. We need all yen pairs to be bullish. 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 And what was AJ? Bullish. Okay, perfect. So we have, so what you guys can see is that on this day, we have a bullish 4H correlation. Now let's take a look at the next candle because we know we don't have this because we don't have the daily and the 4H. We're going to take a look at the next candle, the number of pips, and whether we actually have a trade or not. So the next candle actually closed bearish. How much pips did it move to the upside after it opened? It moved 17 pips. Okay. So what does that mean? Objectively, when you backtest, you always want to be as objective as possible. And you always want to know exactly what would have happened. And that's why it's backtesting or data collecting. You just want to know what your system would perform at when you're looking at it in hindsight. That's 15 pips. This would have been a buy, which basically means this would have been a loss in my particular strategy. It's perfectly fine. All you want to do is collect accurate numbers so that when you move forward, you're making a decision based on accurate numbers. So we're not trading this session. So we're done with Wednesday because there's news in that session. Thursday, we trade in both sessions, and Friday, we're not trading at all as there's news. So let's take a look at Thursday, 9th of March, and see how it plays out. Sorry, guys, I just need some water, bro. Thursday, 9th of March. We're on GJ, we're on pound yen. So that's Friday. Here we go, Thursday. So Wednesday was bullish. So all we're doing is we're going down on the 4H time frame to look for a bullish candle closure. We have a bearish candle close. So we know at this point we don't have daily and 4H. The only way we could potentially trade is if we have 4H correlation. So let's check it out. What do we have on GU? We have a bullish candle. Okay, so we need all yen pairs to be bearish basically. Bearish candle, that's 2. Bearish candle, that's 3. Perfect. Bearish. Bullish. Okay. There's no trading session there. no trading session. And these types of things happen, guys. Like, they actually happen in real life, where you have none of these and you have a no trading session, and that's perfectly fine. Like, you just leave it like that, and this gives you a realistic look at how much time you'd be able to trade within a week, within a day, and a month, etc., 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 a quarter. So yeah, that is a no trading session. Let's take a look at 12 o'clock. So let's go back to the daily and remind myself what the previous daily candle was. Previous daily candle was bullish on the Wednesday, so we're looking for buys. We're looking at the 8 o'clock candle close. Boom. Okay, that's bearish too. Let's see if we have 4H correlation. I don't think we'll have 4H correlation, to be honest with you guys. Bullish, bearish. That's 2 bearish candles. 3 bearish candles. 4 bearish candles. Do we have AJ? 5 bearish candles. Wonderful. Okay, perfect. So here you can see that we went through not trading in New York on the Wednesday. We went through not trading in London on the Thursday. So you went through 8 hours of not trading, basically. And then you finally get a bearish 4H correlation. Now, I know myself, I'd be scratching. I'd be wanting to trade. My trigger fingers at this point is so ready. So now what we're going to do is we're going back to GJ to determine what the next candle did. What did the next candle do? The next candle closed bullish. And how much pips did it move in our direction? A total of 0. Like, literally, this thing is not even moving, bro. Like, the magnet didn't move. So that means essentially we didn't even take a trade in the session. So although this candle was bullish, because we break out traders, we'd wait for a 15-minute candle to break in our direction, meaning we would have seen a wick on the 4H before it pushed bullish. And this thing didn't even move any pips in our direction. So we're not going to put anything in here because it didn't move no pips. And we would have had no trade there just because we wouldn't have actually taken a trade. So now if you sum the week up, you can see that we've taken a total of 1, 2, 3, 4 trades, right? So you're going to put 4 there. This, we're going to say we had 1, 2, 3, 4 4H candles. So we're going to sum this up right here. And then we're going to divide it by 4. Let's close that bracket. And the reason why we're dividing it by 4 is we want to get the average amount of pips that the 4H candle moved in our direction. So the average amount of pips for this week would have been 32, 33 pips. Okay, so would we have taken this? Nope, no trade. Would we have taken this? Yes, there's a trade there. We wouldn't have taken this because there's no trade. So this is taken one trade. Did it actually play out? No, it didn't play out. So we leave that at 0, right? Now when we get here, would we have taken this? Yes, buy. Perfect. Would we have taken this? Yes, sell. Would we have taken this? Yes, sell. So we would have taken 3 trades, and how much would have played out? So this played out perfectly. That wasn't a trade. That played out. That played out. So 3 of 3. And as I mentioned, once again, 100% for the daily and the 4H correlation. Like, it's just this thing right here. And all you need to do is take these trades. It's fine if you can have a quiet week later on in the week. It's fine if you end the week like this. If you take in the trades that have higher probability, like, that's all it is, bro. And what this exercise is making me realize is that you could have busier starts to the weeks or busier end to the weeks and then quiet midweeks. You could have a quiet start to the week, busy midweek, and quiet into the week. It's just about having confidence and knowing what it could potentially be on the basis that you've done the work. That's what it is. If you have done the work there and you know what your strategy can do and how often you can trade, I feel like you'll be good, bro. I honestly feel like you'll be good, bro. So you can see for week number 2, we have a 75% win rate. And bear in mind that if I go to February, what do we do in week number 2? 100%. If I go to January, what do we do in week number 2? 67%. So you kind of seen this trend where week number 1 is not necessarily the best in the markets, but week number 2 in the markets with my strategy seems to be, in terms of directional bias, seems to be one of the best weeks in the market. And this, right enough, it's only one quarter. But when you have all the data, and this is the importance of data collecting in trading, that when you have all the data in front of you, you can make a decision to either risk a bit more in week number 2 because you know that you're making money, or you have a higher chance of potentially making money, or you can, I don't know, just continue doing what you are doing, bro. It's just important to put the work in. I think we can complete this week and then we can call it a day. I've been on here for almost an hour, so let's just complete this week and then yeah. So I'm gonna put in the dates, and then we're gonna put in the news, and then from there we'll move forward. Monday 13th, Tuesday the 14th. Wednesday the 15th. The 16th. 17. Perfect. Now let's go through the news. For Monday, do we have any news? There's no news. Now, there is a Fed announcement at 12 a.m., but that's in the morning. That's not a trading time. Tuesday, we have pound claimant change. So we're going to put that there. Tuesday, we have news. Yes. And then we also have news in London session. So that's yes. Wednesday, we have pound news at 2:30. So that's in London session, in New York session, sorry. So we put that there. Thursday, we have nothing in London. We have USD news in New York, and then Friday we have nothing in London, and then this we can take out because we don't have to put that there, just because at the end of our session, and we won't be trading at the candle closure. So we have news on Tuesday where we won't be trading at all. We have news on Wednesday in New York session, news on Thursday in New York session, as you guys can see. And yeah, let's get capturing, bro. Let's go to Monday the 13th on the daily time frame. Monday the 13th. So we have a bullish candle closure on Friday. So we're looking for bullish candles on the 4H at 4 o'clock. 4 o'clock. Oh, shit. Shit. This is a shit show, bro. Okay, when did... Okay, I think this is where we have daylight savings kicking in. At this point here, we have daylight savings kicking in. So now I need to change my times from 8 o'clock to 7 o'clock and 11 o'clock. And this is important just because of the times that the news comes in, and obviously the candle closures too. So just give me a minute. Okay, so what you can see, what I just did now is that on the 13th of March, this is when daylight savings kicked in, and the 4H candle went from closing at 8 o'clock to closing at 7 o'clock. So it's just important to change this so that I know when I'm looking at the news, I know in which times, because now this 11 o'clock candle closes at 3 o'clock and not 4 o'clock anymore. So any news outside or beyond 3 o'clock doesn't affect this New York session that I trade anymore. So it's important to note these changes in the market, and also just noting that that London session now starts a bit earlier. So sometimes what you will see is that because London session starts a bit earlier, sometimes pound or yen news comes into play now. So something just to take note of. And yeah, let's go ahead and start looking at Monday. Monday, what do we have? Monday at 3 o'clock, we have a bullish candle. What was the previous day? I'm sure the previous day was bearish. Previous day, bullish. The previous day was bullish, so we're actually looking for bullish candle closes on the 4H. We need to go to 3 o'clock now. 3 o'clock. Let's take a look. We have a bullish candle close. So what that basically means is that now you have daily and the 4H. Bullish candle closure. Bullish candle closure. Bullish candle closure. Bearish. And then we need one more bullish candle. Boom, let's go, baby. We have a bullish candle closure again. So what that means is this one is bullish. Bullish. Let me just save this. And let's see what the next candle does on the next candle actually closes bearish, but what you can see is how much pips. 50 pips, bro. You see, this is the tough thing. This is the tough thing. The next candle closes bearish, but it moves up for 50 pips. There's no way on earth that I wouldn't hit TP with 50 pips, bro. This would have been a TP, but now I need to record it as a L on the basis that the next candle closed bearish. That's bollocks, mate. That's absolute nutsack, bro. What? Like 50 pips in my direction for buy, the next candle closes bearish. But now, based on the rules that I have, I need to basically record it as now. But okay, it is what it is. Let me just get some smoke. It is what it is. Let's go on to the next one and continue recording. So we know we don't have daily and 4H right here at the 11 o'clock close. Let's move this to 7. We have a bearish candle. Let's see what the rest of the candles do. Do I get 4H correlation? Let's see. Bearish. Let's see. If I get 4H correlation, this will be a decent trade. Bearish. Let's go. That's 3 of 6. Bearish. That's 4 of 6. I need one more, baby. Give me one more. Boom, 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 boom. Let's go. I love it. I love it when things play out. That's 6 of 6, bro. That's 6 of 6. So what we have right here is we have bearish. We know that this is bearish. And this candle that moved in my direction, baby. Let's go. Let's carve. Ooh. Goddamn. 186 pips, bro. Shit. Money on the floor make me go mo. 185, bro. Shit. 185 with some cells. Type shit. Okay, I'm done talking. Let me see if I can just capture this thing as fast as possible because my eyes are starting to burn. I'm getting tired. And yeah, as excited as I get, like when these things play out, like, yeah, I am getting tired, boys. So yeah, let's just whip it. Let's get this thing done real quick. Previous candle closed bearish, so we're looking for bearish candles on the 4H. 3 o'clock. Bullish candle. Okay, so we know we don't have daily and 4H. bearish. Whoa. What was that TJ that I was looking at? Need to be sure that I'm capturing accurate data. Okay, pause TJ. Let's check what GU did. Bearish, bullish, bullish. I need all the other USD pairs to be bullish. All AG to be bullish. Bullish. Okay, so we have 4H correlation. So we can mark that as, oh, but fuck. Gee, I forgot that Tuesday has news, guys. So we're not even trading that thing. I'm really tired now. Now I'm quite tired. The fact that I didn't even see this. Okay, let's go into Wednesday London session. Wednesday London session. The 15th, Wednesday. So we can see that Tuesday closed bullish. So we're pretty much looking for 4H candles in London session closing bullish. What did we get? We got a bullish close. Okay, that's perfect. So we can mark that as daily and 4H for now as bullish. We know the next candle went bullish. We can mark that. Let's do this from there to there is 50 pips, 51 pips. So we put in 50 pips, potential buys. Let's take a look at 4H correlation real quick. 4H correlation, bullish, bullish, bullish. Come on, UJ. Give me a bullish candle, baby. Bullish, perfect. And bullish, perfect. So that means not only do we have daily and 4H, we also have 4H daily and 4H correlation. So that's perfect, bro. That's wonderful. So we're not trading Wednesday 11 o'clock because there's news. We trade in Thursday London session again, and then we won't trade Thursday New York session because there's news. So we're just looking at Thursday London session, and then we're looking at Friday both sessions. Let's wrap it up real quick. Thursday. Okay, there's AJ. That is not GJ. AJ. Wednesday was pretty bearish, so we're looking for a 4H candle to be bearish. Oh, wonderful. Bearish candle. Okay, so we have daily. On Thursday, we have the daily and the 4H green to be bearish. Let's take a look at 4H correlation. Bullish, bearish, bearish. Okay, perfect. So not only do we have that, we also have that, so that means we can highlight this as bearish. Let's see what the next 4H candle does on GJ. I think it was bullish if I'm correct. It was bullish. Did we get more than a 10 pip push to the downside? We got an 18 pip push to the downside. So this is a bullish candle. This is 15 pips. This would have been a sell. Okay, so this would have been a loss then. That's perfectly fine. Let's go into Friday. Let's see Wagwan, bro. The Thursday was bullish. So when you're going into Friday, London session, you're looking for 4H bullish candle. The 4H in London coming out of Asia is bullish. So we know we have daily and 4H right here. Let's see if we have 4H correlation. We have a bullish candle on GU. If AJ is bullish, then we have 4H correlation too. bullish. Okay, perfect. This week looked like it's jam-packed with this directional highs. Bullish. Let's see what the next candle is on GJ. It's bullish too. Wonderful. And how much pips did it move from the open? It moved a whopping 54 pips. So we're gonna go bullish, 50 pips, buy. And there we go. This would have been a busy week in terms of trades. What? Next candle, bullish. So we know we have daily and 4H there too. Bullish. Let's see 4H correlation across the pairs. We need to move this to 7 o'clock. That's bearish. That's bullish. Bullish. We don't have 4H correlation, unfortunately. So we just have daily and 4H. And what you can see is that the next candle closed bearish. How much pips did we push to the upside? Just about 10, which means that's no trade. So this is a bearish candle, 10 pips, which means it's no trade effectively. Yeah, we would have taken 1, 2, 3, 4, 5 trades in 1 week. That's a lot of trades, bro. There's no trades there. We have 1 trade here and 1 potential winner. 1, 2, 3. Wait, we actually need to see 1, 2, 3, 4. So we took 4 trades here, meaning we took a total of 5 trades. And then how much of them actually won? So we have 1 winner there, and then we have another winner. So 2 wins, 2 losses. I could argue that this should have been a win, but for the sake of the exercise, we're just gonna keep it going and keep it straightforward and simple. So 50% for this month is actually the lowest week with regards to that. We would have had 60% win rate. Let's check what the third week in Jan was. 33% weak as fuck. February 100%, and then 66. Averages out to a decent average actually. So yeah, how much trades have we taken so far? This needs to be 0. We've taken in the month of March 10 trades. That's wild. And we're only 3 weeks in. In February, we took a total of 13 trades. But then in January, we took a total of 22 trades. So it really just shows you that, like, in reality, like, you could get slower months and, like, months where there's more or higher trade volume based on the liquidity of the market. But yeah, that's pretty much it. I've been on here for an hour and 8 minutes. But that's the exercise that I'm gonna be doing for the next like week or so, probably couple of weeks, because it is quite a bit to capture. I might probably do more than 1 live a week just to get the workout. I won't be speaking as much as I did today. But yeah, now that you guys know the basis on which I'm gonna be doing this, next time I come on, I think there's gonna be a high chance that I'm just gonna be actually doing the work and walking through this. But we got through 3 weeks in the market: week number 1, week number 2, and week number 3 of March 2023. And I'll probably wrap up March tomorrow and then move on to April. But yeah, the numbers are looking pretty clean, looking pretty decent. I'm pretty chuffed with what I'm seeing from this sheet and what it's giving me. Yeah. So from your boy Marcy at the Modern Day Trader. Peace out, man.